you always want to look at your time frame. So currently we on a daily. I be seeing some of y'all mark out levels and shit on like the 5 minute. You never want to do that. Always start at the higher time frame. That's called top down analysis. So as you start at the higher time frame, you could just basically see the overall market structure, so you don't get faked out. So me, I like to start at the weekly, man. So if we at the weekly, just mark out the obvious. So if I'm looking at gold right now on the weekly, like sometimes I might go back just to see like what the fuck gold been doing. So gold on a bull run right now as we speak. So just mark out the basics, right? So if I'm marking out my levels, I'm not marking out shit that's down here. I'm not marking out shit that's right where I am. You feel me? But I'm not marking out shit that's down there. I'm marking out shit that where we currently at. So I'm focused on where we currently at. So where we currently at is at this whole area right here. Oh, this shit tweaking. Boom. So I'm gonna mark this low. I'm gonna mark out this high. And this is just general levels. You feel me? How to find your key levels. So as I'm marking out my shit, you always want to mark out the high and the low. I'll mark out this too. Boom. So we got all time high on gold. We got this little high right here at what 4,887. And then we got a low down here at 39.39. Then I'm gonna mark this too. So the way you find out your key levels, you just want to see what the fuck the stock is doing at that level. Like you want to look at the wicks. So if we right here, we can see that the stock with that the instrument wicked right here, and then we had a nice big ass pin bar wick to the upside right here. So this level is telling us that there's something going on. So if I just mark the level out, boom, what level is that? Put my coordinate 4,400. So that's 4,400 on the money. So if you do not know, key levels are mostly strong at whole numbers. So as you can see, well, I need some water. My throat dry as hell. All right, bet. Yep, exactly. He just said it's your psychological number. You know what I'm saying? Turn this light down a little bit. Psychological number. You feel me? So 4,400 is the psychological number. So numbers like 4,400, 4,000, 3,900 on the dot, these are psychological numbers. So you always gonna have a reaction at that level. You know what I'm saying? So that's why we seeing a wick right here, a bounce right here, and we hold the structure at this 4,400. And then overall, look what gold is doing. So all gold is doing is just look like we flagging. It look like we on a bull flag overall. So if you don't know what a bull flag is, a bull flag is a bullish chart pattern. So a lot of niggas be talking down on chart patterns, but I make money with chart patterns. Chart patterns help me trade better. So a bull flag is basically a strong uptrend, a continuation in the sideways, down, but it's flagging up to the upside. Break down how to properly chart. I'm gonna show you that. So you got a bull flag and a bear flag. You know what I'm saying? Bull flag is a bullish trend pattern, right? So you see this first flag pole, and then flag to the upside, right? So if I just go to gold right now, look what it's doing. It look like it's creating that perfect bull flag. It didn't break out yet, but overall on the higher time frames, it looked like we're creating that bull flag, right? So we on a big run up, came down, flag sideways, And now we look like we can, boom, pop up again and, break out. And the reason why I know this is because I'm on a higher time frame. You got to think, shit is meant to go up. The market is meant to go up. You know what I'm saying? So the market is meant to go up. So look at this shit. If we just go back in time, it goes up. You know what I'm saying? So you always want to buy every dip, buy every pullback. That's the real sauce of this shit. To answer your question, how come people been selling? So the market just can't go up. It just can't go up. It has to pull it back, grab liquidity so it can go higher. You know. So that's that. You feel me? So that's the weekly time frame, and then we got the daily time frame, right? So I'm gonna go ahead and remove these board flags just so I don't confuse myself for right now. Do you ever hedge your account if the trade goes against you? No, I just simply stop out. I just simply stop out because I don't want to overtrade, and that's just too much for my mental. So if I'm in a trade and it's not going in my direction, I just simply stop out, call it a day, you know, or try to catch another setup or whatnot. But so I just marked out my higher time frame levels on the weekly time frame, right? So that we still doing top down analysis, right? So after the weekly, I'll go down to the daily. Boom, daily time frame and see what's going on. So look what we doing. So now we just left the weekly to the daily. So now we can kind of see what's going on, but it's much more cleaner because we're on a lower time frame, right? So we could really just do this to confirm our levels. So everything is reacting off the level how it's supposed to. And I be seeing niggas trade like this. Like you ain't gotta have key levels scattered on your chart, right? So they ain't gotta be this bunched up like this. Like, let me see, niggas to do that, they'll do that. Like, yo, trading is you supposed to keep that shit as simple as possible. So if you can identify those key levels, that's great. But you're not supposed to have levels that's bunched up on your chart because that's how you're gonna confuse yourself. So always mark out the key levels that's supporting the previous day highs, the previous day lows, the pre-market highs, the pre-market lows. You want to mark out the important levels. Because if you just marking out a random level, you're gonna confuse yourself like that. I always wanted to know when you say what volume, is that the number of people or the size of the candle? What you mean? You talk about the volume. Our volume don't even work on futures for some reason. I be seeing. Wait, I be seeing that. Is you really making a third profit, or is this? I don't know how to answer that question, bro. I don't know how to answer that shit. So boom. So as we doing top down analysis, we'll do the weekly time frame. We'll do the daily time frame, and then my bread and butter is this 4 hourly, man. So you can even write this down: the daily, the 4 hourly, the 1 hourly, then the 15 minutes. So I look at the 15 minute and 5 minute for my entries, but I'm getting my higher time frame analysis from the higher time frames, like the daily, the 4 hourly, and the weekly. So boom, I just left the daily. Now I'm on the 4 hourly, right? So now I can get the levels on a lower scale. So now I see like another fair value gap right here. So if I'm marking my levels out on the 4 hourly, remember what I said. I'm not looking at shit that's all the way down here. I'm not looking at no levels that's at no 3,000 or no 4,200. I'm looking at where we currently at, right? So I see a wick right here. I see a wick right here. I see the same wick right there, and I seen that we broke out, retested that same area and broke out, right? So right there is a key level. So you want to mark that. Boom. So like I was just saying, it's a psychological number, right? So before it was at 4,400, but now if you go on a lower time frame, look at that psychological number now at 4,450. So at every psychological number, we're reacting. So if your key level match up to a psychological number, that's how you know that your key level is valid and it's like perfect. You know what I'm saying? If it match up to a psychological number. You know what I'm saying? So we got 4,400, we got 4,450, and then we got this high, right? So I like to mark the current high that we just previously made. So boom, right? So you want to mark out the obvious. Boom. So now we just put that shit in the range. You feel me? So you always want to put your trading and your levels in some type of range so you could just know what's going on. So me personally, if I was looking for a trade in this, I would look for some type of demand bounce in this zone. So what do I mean by psychological numbers? So psychological numbers are numbers that has a proven point to it. So like 10, 20, 30, or like if we doing gold, for example, look how we reacted at, let me see, let me go to the weekly time frame. Right. Look at this 4,400 level. So if I just remove this level real quick, 4,400 on the dot, if we just go back in time and back test, we came up to 4,400, rejected. Came up to the 4,400, rejected. We broke 4,400. We manipulated 4,400 right here. We popped up, came right back down to 4,400 perfectly right here. Boom, perfectly. And then we popped up, you know what I'm saying? So if I was looking for a trade, right here, 4,400, we rejected. So this showing me that 4,400 is the key level. So what I'm waiting on is the break and retest of 4,400. That's another one of my strategies, right? So if we just break 4,400, retest 4,400, that's literally the strategy. Let's see what happened real quick. So manipulation, boom. And if you just want to wait for a key entry, wait for that bitch to retest 4,400. Boom, that's that retest right there. And then went up from there. So if you bottom take that bitch in this zone, like if this was your bullish zone, you would have been printing. But it got liquidated out right there. You know what I'm saying? But I'm gonna go to where we currently at. You feel me? Like when it's bunched up, putting different points next to each other, is you gaining profit off that, or is it better to keep it simple? Are you referring to your key levels? Are you referring to bunched up profits and bunched up key levels? So boom, I'm gonna show y'all the indicator I like to use as well when I'm trading gold. It just helped me out. I'm gonna give y'all this indicator too. So as I'm trading with indicators though, you don't want to rely on indicators to trade, gang. You don't want to. But if your indicators match up to your level, it's a go. So I'm gonna show you how to find how to use the MAs with your key levels, with your moving averages. You feel me? When you look for a setup, what are you looking for? I'm finna go over that right now. I'm finna go over that. So boom. So we have supply and demand, right? So as I'm trading, I'm always looking at the supply and demand on the higher time frames. So if I just go back to the 4 hourly, for example, boom, all of this would be supply, right? So if we going up, where can we reject? Damn, I'm fucking up. Where can we reject, right? So if I just mark this level out, boom, this is your supply zone. So you always want to mark out the levels that they tell you, because the levels tell you pretty much everything. You know, so if I'm just putting this in replay mode and go back, this would be my key level right here. You just want to look at those previous weeks. You know what I'm saying? So 4773 is that week. So you might even want to put these on your chart as well, my key level, because my key levels is on point. You know, I just made 5K off of these levels. So these are the levels that you want to use when you marking up your gold chart. Because I noticed that a lot of y'all don't know how to mark up your levels. So that's why you be getting, like, that's why you end up being liquidity. You know what I'm saying? But you always want to mark out, your levels the right way. And then you want to look at the overall market structure. So right now, um, gold does look like a bull flag. I won't lie. Cause let me see. It looks like a bull flag, but it's just too choppy, like right now, for me to tell. So if I was to take a trade on gold, I would look for some type of demand bounce. Throw this on. Oh yeah, they might have fucked my shit up. Safe. I bet. Look on my real chart. Boom. So I'm gonna show y'all my real chart to see what the fuck I got marked up. You feel me? So let's just look for a setup right now, because we finna take a trade live to show y'all this shit. So we finna take a trade live and show y'all how to look for a setup, right? So boom. Then we got your moving averages, right? So the key moving averages you want to use. So this a real sauce, man. I teach my mentees this, So I'm giving y'all this shit free. If you catch it, you catch it. So I use the 21 SMA. So these really are my indicators, you know what I'm saying? But I use the 21 SMA, the 2150, the 50 SMA, and I use the EMA 50 and the EMA 21. So I use both. I use the 50 and the 21, moving average simple and then moving average exponential. So here's how you find it, right? Go to indicators. So the first one, the ones you need for specifically trading gold or just forex in general, you need ICT kill zones plus pivots. So you search this in the search bar. ICT. So this right here. This one. So you need your ICT kill zones on there. These boxes. So these showing you like your London lows, your London highs, your New York lows, your New York highs, your Asia lows, your Asia highs. It's showing you that in real time. So you need your ICT kill zones plus pivots, TFO, and then you need moving average exponential, and then moving average, simple moving average, right? So this is your SMA with the S, and then this is your EMA with the moving average, exponential. You know what I'm saying? And then when you put them on, your inputs, you want it to be length 21, right? So you want to have your SMA 21 length, another SMA on the 50, and then you want to have the EMA on the 50, and then the EMA 21. So I use both at the same time to further confirm my bias. And why is this supported? A lot of niggas don't know about this, but the reason it's supported, what a lot of niggas don't know about these EMAs, you see how the chart creating an M or a W. Can you read about that as well? Yes. So that's called either a double top or a double bottom. You know what I'm saying? So let me go over that real quick. That's a good question. So we got double top. Now after this, I'm gonna go over the EMAs and how to use them. Double top and then double bottom. You feel me? So this is your double top pattern. So your double top pattern is that M. So you got your neckline, your resistance, then your support. You know what I'm saying? So you can see it's going up, reject, form that top, and then went up again and rejected off that same level. So when you set up your key levels perfectly, if you was looking for a trade right here, you would just mark your key level similar to this point, and then it's gonna reject off that same level. You know what I'm saying? So that's why it's important to mark out your levels, and you got double bottom. You know what I'm saying? So like when you learn charting, bro, you could just look at this shit and just know what the fuck gonna happen. But charting, this shit don't take that long to learn. The real thing that take that long, yeah, I say that. But the real thing that take long is mastering yourself, mastering your psychology, and overall just mastering, it's really that psychology of your trading game. Cause it ain't shit to learn chart patterns. It ain't shit to learn how to read a chart. It ain't shit to learn how to use a brokerage. That's easy. Anybody can do that. But the real thing that's gonna separate the niggas that's rich in this shit, like the 10%, that's the ones who follow their rules every day. That's the ones who patient. That's the ones who discipline. That's the ones who showing up in the market, win, lose, or draw. As long as they follow their rules, they good. You know what I'm saying? Like you don't want to wake up in the market full point some shit. You shouldn't hop in no trade and you have anxiety, your heart start beating, have that anxiety because they mean you oversized, right? So the whole point of this shit is to size small and win big. So that's like a key rule that my millionaire mentor told me. You don't have, obviously when you play with more money, you're gonna make more money. But you always want to size smaller and risk with size small and win big because it helps your psychology. You know what I'm saying? So if I'm in a position, if I full port of my account and I'm in a position with $10,000 and that bitch pulled back $2-3, I'm gonna be down a lot of fucking money. Let's just say I stop out, boom, and then eventually go in my direction, right? But I was in with too much size, so I couldn't handle that drawdown. But if you in with $1,000 and that bitch pull it back, I can handle that drawdown, and then I could really let my setup breathe and play out. You know what I'm saying? So even though you might know how to chart and shit, you still might not get a picture perfect sniper entry. You know what I'm saying? Because the market like to manipulate and liquidate. You know what I'm saying? But you have to. That's where the risk management comes in. That can you hold through that drawdown until that bitch work out in your favor? You know what I'm saying? So if you in a position and you in drawdown that you can't handle it, that means you oversized. You know what I'm saying? You simply oversized. Because don't get me wrong, all of my positions, my shit just don't instantly go green. Like I might be in some drawdown, a couple hundred before I go green. You know what I'm saying? But I can handle my drawdown. Like a lot of niggas, my drawdown they'll stop out, but I can handle that shit, because I'm playing with a comfortable size. So you have to size comfortably in order to really trade and let your trade breathe and play out. So a key tip is to size small and win big. Once you just sizing comfortably, you can really let your trade breathe and play out. Because you shouldn't be in. As soon as you get in, you heart beating, anxiety pumping, and you just fucked up because you in with too much money. That's some real simple shit. You know what I'm saying? How to get fine and shit. Then you got double bottom. So what that when you let the trade put and you rock out. So what that when you wait, gang? So what that be when you let a trade you punch into rock out? I don't know what the fuck you saying, bro. I got smoke after that shit. That shit just fucked my head up. I got smoke for that shit just fucked my head up for. I don't know what the fuck you said, guy. Well, I need some water for. I don't know what he just said. I don't know what the fuck you just said. Hey, retype that shit though. I got you. I got you though. I'll answer your question. Retype that shit, bro. Now we get into some sauce though, man. We get into some sauce, man. We get into it. I'm starting off, showing y'all the basis of this shit, but we get into it. And I can't show y'all everything on live. You feel me? Because it's a lot that you have to put into this trading shit to really get it. But I'm gonna do these calls and shit frequently, so y'all can learn and go crazy and shit. I think somebody asked me a question though. All right, bro. So before I move on, do y'all got any for no real sauce, man, real sauce. So do y'all got any questions on this shit? So like the real thing though, like to get rich in trading, it's your psychology game. It's everybody risk management, it's everybody's psychology. It's easy to read a chart. It's easy to identify a double bottom. It's easy to identify a double top. Like anybody can see that shit, you know what I'm saying? But me, I like to look for liquidity sweeps. So that's how you really make money in this shit. I like to liquidity hunt. Once you liquidity hunt, you gonna get rich, man. Cause you looking for the imbalance in the market. So look, liquidity is everything. You feel me? I'm gonna go over that. Just joined. I missed. I recorded. I recorded you. Good. How do we know if a stock currency is exhausted and ready to flip? If it's in demand. So let me go over that. All right. So boom. So we're gonna look for a setup on gold real quick. And I'm just wanna look for some buys. Really looking for some buys. So me, I'm the type of nigga like I don't really like to short the market. Like if I see an A+ setup, I might short it, but I really don't like to short the market. So before I even go over how to use indicators, I just told you other day you be explaining shit so either no bullshit. Like I explain this trading shit to y'all Cause really trading is easy, gang. You know what I'm saying? Like this shit really easy. Like, and it's crazy I can say that shit now because I'm on a different level with it, but it's really easy. But like a lot of new people or beginners overcomplicate this shit. Like even me, I overcomplicate this shit. But when you really break down and just put the real experience in this shit, you gonna get it because gang, like put it like this. You can't just jump in the water and learn how to swim. Like you gotta, you gotta go through the course. You have to. You gotta go through the course, man. Everybody gotta go through. You gotta lose money. You have to, man. This shit'll fuck you up mentally, but you have to go through it though. You know what I'm saying? You have to. Everybody not meant for this shit. But see, I could just look at key levels so easily. But before I even show you my EMAs and how to use them, mark out your key levels first. Because if your EMAs match up to your key levels, it's a go. You know, so if I'm just on the lower time frame now I'm on the hourly time frame, right? So I started from the weekly, then I went to the daily, then I went to the 4 hourly. Now I'm on the hourly, right? So boom, hourly, another one of my bread and butter. You feel me? And then I see that, we had a nice little pop right here. We went up and then we kind of retested that same area off this same little pop. You know what I'm saying? So I wanna mark that because that's definitely a key level. We definitely gonna react off that level again. So that's that 45.63. So y'all see, every time I mark a level, I just don't got no random level floating in mid air. You know what I'm saying? Your key level has to match up with something all the time, right? So we had a wick right here, boom, and then we had another wick at the same area, boom, right? So that's the key level. So 45.63. So you see how my levels is spaced out because I'm looking at the overall supply and demand structure. So your levels you don't want to have levels scrambled up like that. 4 hourly chart. So I like to just look on them, see what's going on, look for a setup. Okay, boom. All right. So yeah, see if I can find a setup. So I do like some loans. I ain't gonna lie. I do like some loans. So why do I like loans? Just simple supply and demand, right? So if you don't know what supply and demand is, let's show you. That's another one of my strategies, man. Yeah, this shit choppy right now. You know what I'm saying? I might not even take no because I'm not even gonna try to force no trade for the chat. I might not trade, but we gonna see. But my trading is simple though, gang. Let me show y'all the EMAs too. I'm gonna show y'all the EMAs and supply and demand, and then we're gonna do a Q&A after this. So boom. Supply. So let me see. You got supply and demand, support and resistance. And there's another thing for y'all, man. As you really get into this trading shit, you gonna see that a lot of the terms and the terminologies is really the same shit. But niggas like to put their own name on it, or niggas like to just put their own spin to it. Like you might see some shit like ICT concepts. ICT is basically break and retest. It's just simple market structure and supply and demand. Like when you a real trader, you can just see through this shit. A lot of those strategies and whatnot, they not doing nothing spectacular. They just doing it's all the same shit, but it's just a different name, gang. You know what I'm saying? So all of this shit is really just supply and demand, supported resistance, and key levels, man. So if you got resistance, real basic shit, but resistance is your ceiling, right? So if I can't break through this ceiling right now, because it's a ceiling up here. So your resistance is your ceiling, and then as your support is your flow, right? So the flow that I'm on right now, we all on, that's your support. So that's like an easy way to remember that. So once you see, so boom, let's just say this is my low, that M he was talking about, and that W he was talking about earlier, right? So if I mark my level right here, let's say I mark my level, boom, we bounce. I'm just simply looking for a retest, boom, back at that same level. You know what I'm saying? And look what we do at the same level every time we react off that same level. Boom, we go up, come right back down to the same level, boom, react again, right? So once you got these levels marked, you can just keep taking trades based off the same level. Then we have your resistance is turned support, right? So now this is your support level, but we went up, we broke past resistance, and now your old resistance is now turned support. So this is just simple market structure. You know what I'm saying? So now we broke above, boom, support, and now it's gone. You know what I'm saying? So your old resistance is now turned support. Same thing to the downside. They show support level, boom. If we break down, your old support is now turned resistance, and then that, goes to the downside. So let me show y'all an example of that. Old support turn, probably fucking this shit up now. God. Old support turn resistance, boom. Perfect example, right? So this shows support zone, boom, we bouncing, support zone, key level, come back to the key level, retest, boom. So so if y'all can see it, it's your 51 area. Let me pull it up. This your 51 area, boom, on the money, right? 51 is your key level. So if we mark it out, boom, 51, we bounce, came right back down to 51, we bounce, boom, right? So, and these are trades that you can take. So if you're looking for an entry, just wait for that bitch to pull it back and bounce. Keep taking the bounce, and that's all you got to do. So, so this is your support, right? And then we finally broke down right here, and then your old support is now to resistance, and it just goes like that. So now it's selling. So we break down, we come up, break down again, we come up, we break down. You know what I'm saying? So that's real simple. So what be the good times to get in and start trading in the morning? So me personally, I like to trade in the mornings because New York session has the most volatile in my opinion. So you got New York session, you got Asia session, London session, right? You got London session is the pre-market, then you got New York session, the market I trade, and then after the New York session closed, you got Asia session. It's a little bit more choppy, but certain names move good, like ENQ and ES move a little bit choppy doing Asia, but gold moves good. You know what I'm saying? So me personally, I trade the New York session because it has the most volatility. So the New York session is 8:30 a.m. Central Time, 8:30 to 3 Central, 9:30 to 4 Eastern. So whatever time zone you in. So that's the times you need. If you want to really trade and take off, try to trade during the New York session. Do you wait for it to break and close on the hour chart? So let me show you if I'm looking for entry. I think somebody asked me something else too. Nah. So that's support and resistance. Then we got supply and demand, right? So now this supply and demand. Supply and demand is the same thing as support and resistance. You know what I'm saying? And you could change your names, but it's really the same shit. You feel me? So boom is your resistance zone or your supply zone. Boom, and then we fall to the man. You feel me? And the same shit. You know what I'm saying? So y'all pretty much get this. So this is all I do as I'm trading. I'm waiting for demand bounces or I'm waiting for supply rejects, followed by key levels and my EMA crosses or my EMA, my moving average cross or my moving average confirmation. So as I'm getting the trade, I like to look for at least 2 to 3 confirmations. You know what I'm saying? Either are we in demand? Are we in supply? Is it crossing my EMA? Is it touching my EMA? What does the price action look like? And what's the overall market structure? You know what I'm saying? So like right here, for example, every time we go up into supply, we overbought. So we sell off. Now we in demand. So we oversold. So now we get bought right back up. And it's just doing the same thing. You know what I'm saying? So what if it keeps shooting and don't come up off that bounce level? So like what you saying, if it keep going past supply and never retest, is what you saying? So if it never retests, so it's going to eventually pull it back. That's a good question though. So let me show you that on the chart actually. You know what I'm saying? So if it keep going and never pull it back, that just simply mean your zone has to change. So like this, for example, right? So if I just mark some random shit, boom. Let's just say this was my trade. Put this bitch in replay mode, boom. So you see this area right here, this 45, It's 4,600, 45.98, right? So right here, I would be looking for a break, retest to go higher. But let's just say that bitch never pulls back. To answer your question, boom. So we just broke right here. So now I'm looking for a retest of this area for us to go back. So I'm looking for a retest of this green zone for us to keep going higher. But sometimes we might bounce early and not go. So let's see what it did. Let's see. Yeah, so shit look choppy right here. But if you was to get in right here off this entry, this was a nice entry right here. Boom. That break, and then we pop and then went crazy to the upside. Boom, pause, right? You feel me? So this is an obvious pullback, but we didn't technically come back down to the zone. But that don't mean your zone can't change. You feel me? So overall, this might be my zone, but I will mark this level too. You want to look at these wicks, so I'll mark this level as well because it still match up. And look what we pulled back at this zone. So even though my zone is right here, you still want to mark out zone the little wicks that's close to that because it might not pull back to your zone. You know, it's the market. Your zone might be somebody else's zone, so it might not pull back to that same exact zone, but it might pull back to an earlier zone. So it's a lot of times where I was in the trade, I had a bounce level set or a rejection level set, but you know, it either was like $2 or $3 away because it never pulled back exactly to my zone. You know, so that's why you want to always mark. You can either wait for it to break out and then catch the retest to go higher, or you could just wait for it to all the way pull it back. You know what I'm saying? So right here, it will look like you missed it. So if I was to get in, I would get in right here. If I was to get in, if I missed it, I would wait for a break of this high. Boom, I would wait for a break of this high. So if I missed it, I'll wait for that break and get in on that, right? So we broke this high, we retested a little bit, and then you know now we flip bearish, and then that's where your EMAs come in at as well. You know what I'm saying? That's where your move averages come in at. So now that's probably the perfect time to get into this. What time frame is best to confirm a pullback? A pullback. I got you. You know what I'm saying? So boom, boom. All right, so let me just take this off and I'm finna just show y'all this shit and just show y'all how fucking easy this shit is. You know what I'm saying? So we just gonna take these off and I'm finna answer bro question real quick. So he said, what if it pulled back and never hit your entry? Okay, bet. So this is my key zone. This is my key area, right? 45.98, 4,600. And like I said, psychological level. So 4,600, you want to mark that as well. So all of this is your zone. So you always want to mark out those psychological levels as well. 4,600, 4,700, 4,750, 4,590, 4,580. Those are psychological whole numbers, psychological levels. So we're not talking about 4,581.23, 4,586.41. We're talking about whole numbers and psychological levels. You know what I'm saying? So that's another key tip you want to put. And then for the 15-minute chart, if we broke out to the downside, all we did was retest. Boom. That's what you want to wait on, chat. You know what I'm saying? So look how we broke out with volume. All you want to do is wait for that pullback to that EMA, followed by your demand zone, followed by your bullish market structure, right? So all you want to do is wait for that pullback to this EMA for us to go higher. So to answer your question, because my original zone was what? This 45.99, but we never pulled back to that area. But we at the psychological level 4,600. But then you want to put that EMA on too. So let's just say I didn't even have the psychological level mark. Let's just say I didn't even have this shit marked. And I just had that mark. Boom. my EMA still is at this 4,600. You know what I'm saying? So let me just see how it's still at that 4,600. It's still at that 4,600. So your EMA helps you identify where it can go without being on the money. You know what I'm saying? Because we're not gonna get no perfect bounce at this exact level. You know, trading just don't work like that. But it's all momentum based. So if you just find it off of that momentum level, you will be straight. And then you want to look at these previous weeks as well. So even though that's my level, I might want to mark this as well because that's still my bullish fair value gap. You know what I'm saying? But we just gonna unmark that for now. So we got your 21 and then your 50. So I use these on the 15-minute time frame. You know what I'm saying? So I use the 2150, then the 21 SMA, then the 21 EMA. So I use all four of them, right? So this is all you doing. We break out with volume. Want to wait for the pullback of this EMA to go higher. And to show y'all how EMAs work, just look at the trend of the chart to see what they doing, right? So every time we touch one of these key EMAs, we make a move. Right here, for example. Boom. We came up, retested these EMAs perfectly, and then broke up. Then broke out. That's a trade. And then boom, we flushed right here. We manipulated, but all we did was hold this key area. So once you learn how to identify zones, you could really find those liquidity sweeps. You know what I'm saying? All we did was boom, EMA is cross, EMA cross, EMA cross. Boom, we broke up. We shot up. You know what I'm saying? So you always want to use those EMAs on a 15-minute. I like to use them on the hourly as well. You want to start on a higher time frame and use them on the hourly. But really, all I'm doing is I'm just looking for my supply zones. I'm looking for my demand zones. I'm looking at, does it match up to one of my EMAs for me to take my entry? You know, that's really all I'm looking for. You know, so like 4,500, 4,600. This is my bullish fair value gap. I'm just looking for a retest on the lower time frame of this area, right? You got your fair value got marked. So when I say I went on the entry, I waited for it to pull back to the zone for it to go up. So even though my key level is 45.98, it might bounce at 4,600. You know what I'm saying? So that's why you gotta have the whole area marked so you can see the overall zone, because we don't know on the money where it's gonna bounce at. You feel me? So if you just mark it, you would be straight. About manipulating, I'm gonna go over that. You know what I'm saying? But let me let this trade play out. Boom. So we're just gonna press play. Boom. Feel me? So this manipulation, and let's see what happened though, because I think we broke down. Boom. Right. This shit moving. So yeah, that's where we currently at. Yeah. So boom, we broke. We came right down to this EMA. Because I like to put them all on. We came right to this EMA, we bounced. Boom. That's the trade. Right. Take my scalp. Because with gold, I'm not looking to swing for weeks and days. I'm looking to catch my quick 100, 200, either 50, 100, 200 points, and I'm out. You know what I'm saying? So, boom, we react off that level. You out. And then look what we did right here. So, like I was just telling y'all, your support turn resistance and your resistance turn support. So now, this was my old, not so at first, this was my demand zone, my support. But now we flush below that and we use the same zone as resistance now and we reject it. You know what I'm saying? So all we did was come up, we flushed with volume, we popped up, we rejected off the same area that was currently our demand, then we flushed down. You know what I'm saying? So this is just basically how you identify overall market structure, you know. So let me know if y'all get that. Let me know if that makes sense. Let me know if that made sense or whatnot. So like right now, for example, let's see. So we looking for a trade. Oh yeah, so this is live. So yeah. So if I'm looking for a trade right now on gold, if I'm looking for a trade, this shit still look bearish. You know what I'm saying? So we have some demand zones down here. So like a buy area, but this shit still look bearish based off market structure. You know what I'm saying? So we got this 4,600. We below 4,600. And it looked like all we're gonna do is just come up to this EMA. to keep going down. Now, if we come up with volume, because me, I don't like to guess the market. I wait for it to make the move first and then make my move, right? So it could either come up and reject to keep going lower, or it could come up, break out, retest the same area to keep going higher. So I'm waiting for it to make the move first before I get in. I'm not trying to guess the market. That's how you get fucked up. Don't never guess. Don't never anticipate a move. Wait for it to wait for it to make the move. Wait for your confluences to line up. Then once it makes the move, wait for that pull back to your area, or wait for that pull down. You know what I'm saying? So right here is the pullback. If it's bullish, pull back, boom, or the pull down, I like to say, or the pull up, it goes down, came back up to go. So it's the same shit, just flip. So the EMA stuff be moving with the candles. Yeah, it moves with the candles live. So you gotta think these are lagging indicators. So all of this shit is lagging. So it's live, but it's not live. So it's a lagging indicator. You know what I'm saying? So if you know how to correlate the indicator to your key levels, that's how you gonna know that your shit is green. So I like to put let me show you for example, like I don't just go based off of EMAs. I like to mark out my key levels first and my zones first. And then I put my EMA zones to help me confirm my bias or confirm my thesis. Right. So if I go here, 21, boom, look where we at this zone, 50 at this zone on the money, 21 at this zone, 50 at the zone, right? So I marked out my key levels. I marked out my zone. I marked out this where it was demand right here, but now old demand now turns supply, and now we trading below this zone, right? So now old demand is now turning resistance, and now we below these EMAs, followed by we below market structure right here. You feel me? So as of now, I'm waiting on gold for entry. Waiting. Some shorts do look good. Let's see. So this the 15-minute chart. I like to go down to the 5 minute, see what's going on. AEMA. I like to use the AEMA too. There's some more sauce. All right, so let me just take these off. So the AEMA, I strictly just use those on the 5 minute, right? So the 21s, I use those on the 1 hourly and the 4 hourly. So the 21 SMA, the 50 SMA, the 50 EMA, and then the 21 EMA. I use these on the 15-minute, hourly, and 4 hourly. But when it comes to my actual entry, 8 EMA, I use that on the 5 minute chart. So if I just go down to this 5 minute chart, you could just see how it's reacting. You know what I'm saying? So we above it, we bullish. If we below, we bearish. So you can see every time we flip and every time we bust through it, we create a large move with a lot of value. So this, for example, we holding with volume. We holding with volume. So this is a better example. We holding this. So look how we just holding this EMA, right? We holding this EMA, then we finally break down below it. And then boom, old support is now to resistance. Now we can just trade below this EMA right here. You feel me? Same shit. And then if I was looking for a trade, overall market structure, right? So boom, if I was looking for a trade live, if we did that, you want to mark this zone, right? So now if I mark this, boom, this is my short-term supply or my short-term resistance. You know what I'm saying? So I can see that. See, like I'm not trying to guess the market. You feel me? So I could see that we was bullish above the zone. We was bullish. And then we finally broke down with some volume. We came up, ground liquidity. We retested, and then we came down again. So now at this point, we below the EMA, and we have a key area right here of supply. So let me just move this so you don't get confused. Boom. Let me just move that. Boom. All right. So now that's your supply. Because why is it supply? Because it's telling me that we broke down with volume. We came up, retested, broke down again, and we below the EMA. So as we below, but price is bullish. So I'm just looking for a retest somewhere in this area for entry. So look what we did. So even though we going down right here, you don't want to chase and get in, because so like, what if I be like, then let me chase this bitch flush and let me chase? It's gonna flip on you. Now you liquidity. You know what I'm saying? So right here, a lot of niggas got stopped out because they see that we on a downtrend, downtrend, downtrend. Okay, let me get in let me get in some puts, or let me get in some sales to go down, and that bitch flipped on you. You know what I'm saying? So you always want to get in at a key area. Don't just get in because we're on a downtrend. Wait for the retest of a key area, wait for the manipulation, then get in. You feel me? So boom, we manipulated, went up, back to the same area where we go. The same exact area, boom, for entry. You feel me? And now we finally made that move below that level. So if you would have caught this and even this to this, you would have been up dog shit. You know what I'm saying? So we broke it. We above this EMA right here, but all we just above the supply. When we traded right below the supply, rejected off supply, and then we broke down with fine. So that's overall how you read market structure. You know what I'm saying? Feel me? So let me know if y'all got any more questions on that. You know, just like reading market structure, supply and demand, and how to find out your levels and shit. So we just gonna take this off to clean up my chart. Where do you place stop loss? So stop loss. So my stop loss pretty much goes by. So like, let me see, for example. So I'm gonna show you how I place my stop loss. You feel me? So what's a good trade? So look, this is a good trade right here. So your stop loss, you just want to do like that previous candle. You feel me? So like, boom. So if I was looking for a trade right here, I'm gonna let the trade play out, boom. So if I was looking for a trade, I would look for a bounce somewhere at this area, right? I got 46, I got 45.69 and 45.63. So I got a demand area down here. You feel me? So all of this is pretty much demand at this point in time where we was currently at. So that's what I'm looking for. Simply supply and demand. Wait for it to come down, retest my key level. And this 45.63, I got this off the higher time frame. And then there's this 45.69. This is this level right here. You know what I'm saying? So we just let it play out. Boom, manipulation. Right here. So this is that manipulation counter. Look how we come down, grab liquidity, sweep right off of this demand, and then now we trying to go. So after we sweep, so boom, after we swept this low. So look how we swept. Let me play that back. Look how we swept this low. You know. So boom, the key level is right here. Let me see, let me make that shit a little bit more sharp. The key level right here, 45.69 and then 45.63. We not just gonna come to the key level and just top that bitch perfectly and go up. We gonna manipulate and liquidity sweep. Boom, that's a manipulation right there. So at this manipulation candle, all of this is still your bullish fair value gap. You know what I'm saying? So now, if I'm looking for an entry, now my shit moves up. So now this is my zone, because we already wicked it down here. So probably 9 times out of 10, we're not gonna come down, to that same area again. So this is now my area where I'm looking to get in at. So it already wicked right here. So this kind of invalidated. It already wicked. So this demand basically already got tapped. It's already got tapped. So now my next demand is this, which is this wick right here. So this is my next demand. You feel me? Boom. And this would be my entry. So if I got in where I would enter off this candle, where I can't really show y'all in real time because the way the candles move. But if I was to get in right here, I would keep a stop loss below this previous candle. So if this was my entry, this bottom take right here, boom. See how this wick match up to this wick, and then it went crazy off that. I would keep a stop loss below this previous wick. So that's how you basically, find your stop loss and shit below the previous wick. And then look what happened, what the stock did. went up from there. So that's a perfect supply and demand zone. We came down, we we swept this low, this 45.69, 45.70. We came down, swept, tapped into demand, and then we came right back down and retested this low. So now this is my new fair value gap. Boom, from here to here, and mark that. Boom. We came right back down. We swept that low. Boom. And then we bounced right there. I'm gonna keep my stop loss below this previous candle, and I'm gonna catch this trend back up. So that's just a simple manipulation, and then for it to go. Can you talk about liquidity sweeps and some more examples? So that's one example right there. Let's see what's another. Let's see if we can find some more examples. This is my real chart too. So fuck it, we on a real chart with it. No, I'm gonna delete that. Keep that on there. All right, so liquidity sweeps. So I like to look for them on the lower time frames. So I look at the higher time frame for my overall analysis, but when it comes to my liquidity sweeps and shit, I like to look at the lower time frame, see what's going on. So if I just mark this shit, so now I'm on the 15-minute. So let's see. 5-minute, boom, you can really identify them bitches. So liquidity sweeps are basically when you see a quick imbalance in the market between buyers and sellers. So like right here, you see how the stock is just going up, you know, on a nice uptrend, and then we flip, start going down, and then we go down again, and then we just get this boom, which is one big ass wick. This is where liquidity just been swept. So price likes to target previous lows and previous highs because they know that's what niggas stop loss at, that's what niggas entry points at, and that's what niggas it's a point of interest, it's an area of interest. So that's why banks and institutions, for example, they looking to sweep that area to knock out all the retail traders so they can get in. You know what I'm saying? So right here, for example, was a point of interest or a key area. But look how we just swept. We just swept it. Boom. We swept it with volume and then we bounced. You feel me? So let me just play that back. So overall, my key area, I want us to bounce right here. Let me mark this shit out so you can actually see. Path, boom. So I want us to come down to this key area, 45.69, and bounce and go up. But we're not gonna move that perfect because it's the market. You know what I'm saying? So we came down, we flushed through this low, we flipped, we swept this low, liquidity sweep, and then we came up, and then we retested, and then we went. You know what I'm saying? So that's where I'm getting in there. After I see this sweep and this bullish pin bar, that's where you want to get in. That's why I'm gonna let this play out and show y'all what a bullish pin bar is. Boom, we swept. So I'll be looking to get in right here. This would be my exact interest. So if I'm looking for some loans, I'm gonna get in right here off this fair value gap. I'm gonna mark the bottom of this wick to the bottom or the top of this wick. So that's how you mark up your fair value gap. So just look at the wick. The wicks tell you everything. So this wick and then this wick, right? Mark that, boom. Correlate to right there, boom. I want us to come down. So my entry will be right here. Stop loss below this candle. Yeah, look how we just tied right to that box and went. You know what I'm saying? Boom, we went crazy. So that's a perfect live example. So you do liquidity sweeps, then break and retest? Yes. So I do. So as I'm looking for trades, I like to look for liquidity sweeps. It's called liquidity hunting. So I like to look for liquidity sweeps. It's another example right here. I'm gonna show y'all another example right here actually. So I like to look for liquidity sweeps followed by the break and retest. They pretty much the same thing. You know what I'm saying? So boom. Oh yeah, let me show y'all this shit real quick. Take that off. I bet. So if I'm looking for some shorts, for example, right? You always want to look at the pin bars. So you see how we got like thick bullish pin, like we got thick green pin bars, and then we got some little short red ones, and then we got some where it's just a wick. It's not, you don't see no type of pin bar at all. You just got a wick. So these are very important. So these are called reversal pin bars or doji candlestick or doji candlesticks. You know what I'm saying? So you got chart patterns, then you got the actual candlestick patterns. You know what I'm saying? So as you see these dojis, they're telling you what price want to do, right? So we got a lot of bullish value, boom, and then we got this doji that came in that's telling us a reversal just came in, right? So now we got no more buyers. The sellers came in and flipped that bitch, boom, and now we're starting to go down. Then we came right back up again, retested that same area, and then we finally made that flush. So let me show y'all what doji candlesticks look like and how to read doji and pin bar, or you could call them hammer or pin bar, whatever you want to call it. But it basically just signifies a reversal trend. So these are this is probably like one of the most important things in your trading. If you don't know how to read this, you're basically fucked. You know what I'm saying? You're basically fucked. Let me. I don't like that example. I'm gonna show y'all a Google image example, and I'm gonna show y'all a real example of real trades that I'm taking. This shit. Hold on. Y'all liking this shit so far? How y'all fucking with this shit, man? Hopefully y'all learning something new. Hopefully y'all learning some sauce, learning some shit new. Fire emoji, good shit, man. Good shit, good shit, good shit. What's your top candlestick? Yeah, y'all in this bitch learning, man. That's what I'm trying to do. Yeah, run this shit, bro. I'm telling you, this shit gonna work, bro. Run this shit. Run this shit. This is a real game. Like I made my first 100,000 off this shit. Like it might be so simple, but it works. You feel me? Like, and they be the thing with trading. Like a lot of niggas don't be realizing this shit just really is really simple. But it's the risk management and psychology that fuck niggas up. But the concepts and the overall analysis is very simple to understand. It's just you just looking at overall market structure, price action, key levels, and you want to mark out your supply and demand zones on the higher time frame and just wait for those liquidity sweeps, wait for them, then wait for those for that confirmation to get in. So the market gonna tell you everything it want to do, man. It's gonna tell you everything. You just gotta wait for that shit. So let me see. I seen a question. What's your top candlestick pattern you look for? So my top candlestick pattern is this doji. You know what I'm saying? It's this doji. I'm finna get to it right now though. I'm finna get to it. Hey, if y'all see me and shit, like if y'all catch me talking, just repost this, but like, post on your story, I'm gonna repost you on my shit. Oh yeah, phone number did text me. I forgot to text him back. Fuck. You feel me? Like repost me on y'all story. I'm gonna repost that shit, man. Catch me talking this shit on some shit. I'm gonna repost that shit. But overall, to answer your question, what is your top candlestick pattern you look for? I like to look for and make sure you tag me too. Tag me, post me y'all story. I'm gonna repost that shit. But what do you look for? So I like to look for the doji and the doji candlestick. So let me go to this shit. I'm gonna do one at a time because that shit bogus. So first we're gonna start with the doji. So to answer your question, boom, the doji candlestick just here go a perfect example, right? So it tells you that the reversal is near or a reversal just came in, right? So we going up with value, we going up, then that bitch doji, and so this basically telling you everything you need to know, gang. It's telling you everything. So let me look right here. It's just telling you that the trend has been reversed. So boom, we got the doji followed by a bearish reversal, right? So we got a lot of uptrend volume, and then that doji came in and we closed and opened in the same spot. So once you see this candlestick, a green candlestick basically means we open right here and we closed at the top. A red candlestick means we opened at the top and then we close at the bottom. That's what make a candlestick red. But when you got the doji, that means it came up at this point, but we open and close, or we close in the same spot. So that's what makes it a doji. So doji, we went as low as here, we went as high as here, but we basically in the same spot. So that's just telling you that the buyers and the sellers, it's about to be a reversal or a change of structure, or basically a structure shift, if I should put it. Feel me? So boom, we on a downtrend, downtrend, downtrend. That doji came in, we went as low as here, but we closed up here. And you can just take trades based off of this zone. You can set your fair value up right here, and you can just take this loan to the upside. So it works both up and down. Then we got the hammer. So that's another one that I like as well. So this like the nitty gritty that niggas don't really look at, but you have to know this type of shit. You know what I'm saying? So we gonna do the inverted hammer. Boom, this is a perfect example, right? So price action is telling you, so this is another confirmation. If you see that we're going to a demand zone and you see bullish hammer candlesticks in your demand zone, price action is telling you that the thing is bullish. You know what I'm saying? So we coming down with volume, but as we going down, look how we wicking. Boom, we wick, we wick, we wick. So these candlesticks is telling you everything, right? The volume is starting to go down and the trend is ready to flip. You know what I'm saying? So it's telling you that, that bitch is ready. That bitch basically is powering up, man. So them bitches work up or down, both ways, both directions. You know what I'm saying? So when I'm looking to answer your question, as I'm looking for strategies and entries, I like to always look for the hammers and the dojis. Bro, that tell you everything. And I got a book. I got a book that teach all this shit. It's called the Candlestick Bible. So I got this book free for everybody. You know what I'm saying? So that's the Doge candlestick, and that's basically how you like that. I was looking for the same thing in my liquidity sweeps. So now you just put everything together. You know what I'm saying? You put your double bottom, double top overall. I'm gonna show you your double bottom, your double top, your overall market structure, and let's see, and your key levels mixed with your price action. You know what I'm saying? So let's just see if we can find some shit. So this replay mode, but I'm gonna show y'all what to look for as you back testing and looking for a trade, right? So when we letting gold play out, boom, right? So this doji is telling me everything I needed to know. So we not finna try to guess it. We not gonna try to guess the doji. We not gonna try to guess the reversal. We gonna wait for the move to actually happen first. So boom, that's the doji. Then you want to mark that bitch. So let's just say we just marking some shit out. Boom. You want to mark it. Boom. So this is your supply. So now this is your confirmed supply. Why is it confirmed supply? Because price just showed me that it came to this area and rejected. So now my supply is at 4,600 currently at this time that we was at. Because price told me. You want to wait for price to speak, man. Never try to guess that shit. Wait for price to do what it do. So boom. All right, look at the zone we at. Simple supply and demand, right? Demand, we went up. We came to demand, we went up. Now we in supply. We still no rejections. Boom, reject, boom. And if you just make this gap bigger, it does. It's literally doing the same thing it's been doing at that same zone, right? So boom, we came right here. We rejected, came up to at this same area right here. Came down to demand, we bounced. Boom. Now we back up into supply. Boom. Same area we rejected. Right. So this is very important, man. Like if I can't preach this shit enough, when you properly marking out your zones and your levels, it's gonna like change your trade completely. completely. You just wait for that entry. So boom, 5-minute chart. Boom, there we go. That's what I'm looking for. So it showed us 2-3 times that price wanted to that price wanted to go down right here. So we went down right here at that level, and then we came up to right here, we went down, and then we came up to that same price again and went down. But remember what I was just saying. Now we have a doji candlestick pattern. You know what I'm saying? So if I just put this, boom. So this is a doji, right? This is basically a bearish hammer. You know what I'm saying? This is a bearish hammer followed by a supply rejection. You know, followed by a bearish price action, right? So we came up, rejected, came up, rejected again. For me to be long, I will have to see for me to go long on this, I would need to see a break above this high, a retest of the high of the low for us to go, higher. But now, since price showed me that it rejected, since price is telling me that it rejected, we originally we came up, rejected right here, grab liquidity, came up again, boom, same exact area. Now we going down. You know what I'm saying? So this is like a double top or a double bottom in my example. But in this example, it's a double top. You know what I'm saying? So came up your first top, you mark the area, and then we came right back to the second top in your supply. So we have a double top in supply. So that's confluence number one. Confluence number one is the double top. Confluence number two is we're in supply, and then confluence number three is that bearish price action or this bearish hammer, which is this bearish pin bar wick. See how we got nice candles right here, but then we wick. So this wick is telling you that price want to shoot down. You know what I'm saying? So let me just go back to that. Exactly plus. I ain't even got the EMAs on, but plus the EMAs too. So if everything match up, it's a go. You know what I'm saying? So if I just go right back to your example, so if your market structure match up to your EMAs, match up to your supply and demand zones, where if everything match, take the trade. You know. Then we got double top. So boom, if that double top pattern, damn, what the fuck? That double top pattern. What I just did that. Double top, boom. That M you was talking about, you know what I'm saying? Double top, boom. That first M came right back. That second M, you know what I'm saying? M, boom, M, boom. And then right here, this is your support, right? It flushed through support, retested your old support is now turned resistance. Now that bitch broke down. You know what I'm saying? So three. So exactly. I want to say three. I say 2+. But if you really want like an A plus setup, you want to have at least 3 or more confluences. You know what I'm saying? But sometimes I might only see, because I just got that market intuition now. So I might only see 2 confluences and I take the trade because I just know what's going to happen. You know what I'm saying? But overall, price tells you what it wants to do. So you don't even you could look at the market from so many different perspectives. You could look at it as like, okay, you could be like, okay, I see a demand bounce. So you see my neckline, this level matches up to this level, matches up to this zone, and then matches up to this zone. So me, I could just look for a break and retest of this right here. So I could look for that breakout of that zone, that retest, boom, of this level right here. I could take that long, boom, I'm out to trade. So that could be one way you could look at it, or you could be like, okay, we come up, rejected, boom, we came back up to the same area, and what we do, rejected again. That same wick, we wick, boom, we came right back up that same wick, boom, and then look what's right there. That's that doji candlestick or that bearish pin bar. We got the long wick followed by the small rectangle. You know what I'm saying? If I go back to the chart, we got the long wick followed by the small rectangle. So that's the pin bar. That's that pin bar. Boom, price want to shoot down. My entry could be right there going down. Or you can catch that bounce again. Boom, catch that bounce at that same area. Boom. Like you could look at this shit from so many different perspectives. You know what I'm saying? Like your stop loss might be another motherfucking entry. You know what I'm saying? Your entry point might be somebody's stop loss. So it's like it's the market. The money is just forever moving, it's forever flowing. You just find your way, just find your spiel. Find your way in it. And then same shit right here. Look at the price action. Right, we come up. That first top came right back up again. Second top, boom. Bearish price action. Wicks coming in. Wicks coming in. Then we pop up right here. We grab liquidity above this level. We swept. We swept these highs. And then but we instantly shot back down. Boom. And then now we got a long ass wick right here. So now we get some shorts right here off this double top and catch this downtrend. Then or let's just say you miss it. If you really want to get beastie with it, you can wait. Cause sometimes it might do that, it might wick and still go. Like it might wick like this and still go up. So you can wait for that structure to break down, right? So you can wait for it to break down with volume, boom, it broke down, confirmed. Wait for it to come up and catch that retest. You know what I'm saying? So it just depends on how you really look at this shit. You know, if I just press play, boom, short. You know what I'm saying? That's a short. Boom. And like I just said, I literally just said it, right? If you missed it, so let's just say you missed that, boom, you missed it. Okay, that's cool. Now, if I missed it, just look for a retest because if you miss it, it's probably not gonna come back to this top zone. So you got to move your shit down a little bit. You know what they bring? Just keep moving your zone down, right? So we got the top of this wick and then like the bottom of this wick. So like boom. So this whole area right here. If you miss it, just wait for it to break down, come into the zone, and keep playing that downtrend. Oh, boom, came up right back to the zone, play that downtrend. So we literally wait right out in the downtrend. Boom, like look at the levels, gang. Levels telling you everything. Where did I get that level from? Right here. So your levels will always match up. I got that level from Thursday, August 27th, and it made a reaction the same day. So this was early in the day. Boom. Early in the day, we made a level. I'm gonna just mark this shit. I'll mark that level. Boom. Make that red. You feel me? So now let's just say you missed that. So let's just say I had this. Let's just say I had this level mark all the way. I been had this mark, off the open up. I been had that level mark. Right. So I said this red level, this 45.93. I already had this mark from right here because price telling me that it bounced right there. So that's very important. And then look right here as well. We bounced again off that same area. You know what I'm saying? So now if you missed a short up here, if you missed it, boom. Just wait for the retest of this zone because all of this is supply. Because price told you that it's weak right here. You know what I'm saying? So just wait for that retest. Followed by your EMAs too. I ain't even got the EMAs on. And then we came down to the man, swept this low, bounced right here, then went back up. So it's like this shit it just keep going. It keep going, up, down, up, down, up, down. So you gotta find your entry. The shit keeps going, man. You know. But I gave y'all some sauce on here today, man. Let me know if y'all want me to go over anything, but we pretty much done. I ain't gonna lie. So we gonna the shit that I just taught y'all, make sure y'all implement this shit like ASAP. You know what I'm saying? And like I said, you can learn how to chart. You can learn how to, it's gonna be on my Zoom. So I'm gonna go over that. You can learn how to chart. You can learn all of this chart analysis and market analysis, this and that. But if you don't have the proper psychology and the risk management behind this shit, you're gonna always crumble. You know what I'm saying? So learning how to chart is one thing, marking out your supply and demand zone, all that shit easy. But you still have to apply risk management behind your trades. It's not about making the money, it's about how you manage that shit. You know what I'm saying? So it's easy to make money in the market, but it's also easy to lose that shit too. You know what I'm saying? So that's what the hard part is. That's what differentiates the 1%, the 10% from the 90%. You know what I'm saying? Like just always just wait for your shit. It's not going. It's not like y'all be chasing setups. Don't never chase no setup. Wait for that bitch to make the move, then wait for the retest in that area for it to go. Like, look at this shit. Like, even look at this example. You know what I'm saying? If I'm looking at this example, we showed a supply right here, perfect supply. We came up. So let me mark this shit. Actually, that's my key level right here. Boom, key level. Mark the red. But look what we doing. It's kind of like a fucked up ass a bear flag, but now this is just simply a bear flag. You know what I'm saying? It's not the best, but really just a bear flag, right? Come down with volume, flag to the upside, and then flush right back down. So we flagging right into this zone, right into that zone. Price action flush. You know what I'm saying? This is a simple bear flag. You know, so let me just show y'all what the bear flag. So we got the bull flag, then we got the bear flag. Appreciate it, bro. Much love. Then we got the bear flag. Boom. So that's the difference. So the bear flag is the flag pole down, small body candles going up, and then flush back to the downside. So the bull flag, bear flag is the same thing, but it's just reversed. You know what I'm saying? So price is telling you that's bearish, right? So it's coming down, flagging up, going back down, flagging up, going back down, right? If it was bullish, we'd just go up, flag down, go up, flag down, go up. You know what I'm saying? Because price is bullish. But right here, price is bearish, right? So we flagpole, small body candles, boom. Because how do I know that we bearish? Because all of these red candles right here. So price told me that it wants to keep going down. So if I go here, like before the move even happened, my confluence is, what would be my confluence? We popped up into supply, popped up into my key area. We already rejected right here. So all of this is pretty much supply. So if I just mark that, all this is pretty much supply. Boom. And we flagging. So, and we have a bear flag as well. So like, this is just telling you that, you know, this shit is bearish. You know what I'm saying? So that's pretty much how you do that. Then just wait for that bitch to come down, sweep your low, boom, catch it back up. You know what I'm saying? Same shit. You feel me? But can you show us how you mark up your chart in the morning? Yeah, so I'm on stocks in the morning. You know what I'm saying? So I'm not really focused on Forex in the morning. But if I remember, I'm gonna definitely send my charts. But if you want to catch me marking on my charts live, you'll have to join my Discord for that. I stopped trading Discord, but when it comes to my Forex setups, you just got to catch me, you know, when I call that shit out. But as I'm looking for my trades, I'm going to always send a screenshot of what I'm looking for. So before the trade even happened, like, let me show y'all this shit. Just know I'm not bad. Shit that I say is real. So like, oh yeah, bro, just got to pay y'all shit. Let me show y'all. So like this trade I was looking for the other day, yesterday. Right, I showed you the trade before it even happened. So if you want to look at the like my live analysis, just be on point for that. I'm just trying to show y'all. Okay, here go right here. All right. That shit. And I don't think I can find it. But if you just in my chat, I'll send my trades before I get in them anyway. Trying to find that shit because here you go, right here. Here you go, here you go. Yeah, here you go, here you go. All right. So as you can see, this was my trade I was looking at, right? It's exactly what I just told y'all. We came to 4660. We rejected off that key level plus psychological number. So it's like we have a higher chance of going down at that level. And then I said, hey, we bullish, right? So look what we doing. We coming up, bear flag, breaking out. Bear flag, breaking out. But right here, I'm looking for a retest of this bear flag or a retest of this key area, right? So like I say, I'm waiting on this gold pullback to this SVG, right? I sent you it before I even, seen it. I'm sending you what I'm looking for. And that bitch came right back down, right? We rejected that 4660, boom. I got in some buys right here at this 4660, and I caught this trend back up. So I think, let me see, boom, yep, bullish fair value gap. So we got bullish fair value gap, breaking retest of the zone, plus my EMA retest. So you see how everything match up? Everything match up perfectly. You know what I'm saying? And I just took that, took this trade, you know. How much was I up on this? I forget. I don't even know. Yeah, so here go the trade when it eventually played out, right? So before the trade even happened, I showed you what I was looking for, like before it even happened, right? So we was right here in that screenshot, and I said, I'm looking for this pullback to this fair value gap, and what to do with that bitch? Pullback to the fair value gap. It held my EMAs, it held my structure, and then it eventually broke out. So this is a trade. You know what I'm saying? I'm looking to get in the bottom tick. You feel me? So and yeah, bro made what 5K off that shit. We literally seen it. Look, we had the same zone mark. The shit I'm teaching y'all niggas is making real money off this shit, right? The shit I'm to look the same exact zone mark, that fair value gap. Boom. Same exact zone. Get in at that low, that break and retest of this zone. Catch the trend back up. This not even me. This KJ, you know, there's somebody in my chat that be calling out gold with me. Right? We be smacking shit on gold, but Brody a demon though. You feel me? But look, he got the same exact. We run the same exact strategy. Bounce off the man. Is holding these EMAs, and the EMAs is basically telling you that this shit bullish. Look how he's holding these EMAs and just going. But right, we got in down here. But if you catch that bottom tick, that trend reversal, you good. You know what I'm saying? Yeah, so that's how that went. And then this the trade when it fully played out. That's crazy. So I caught this shit before it even happened. Right. So I'm looking for this pullback and it fully played out, you know, bullish in my direction. So shit that I'm teaching y'all, I'm actually using this shit. I'm not just putting this shit on my ass for, you know, it's real shit.